A new banking regulation could put your Social Security payment on hold. Here's everything you need to know right now. If you're someone who collects Social Security, SSI, or SSDI, please stop whatever you're doing and give this your full attention. A significant new banking policy is quietly being implemented across America, and the vast majority of older adults have absolutely no clue that it could directly affect how and when their benefits arrive in their bank account. We're talking about your monthly payment, the funds you count on for food, prescriptions, housing, and your regular expenses. This is not a conspiracy theory. This is not political chatter. This is a genuine policy transformation that financial professionals are describing as one of the most significant shifts affecting seniors' bank accounts in recent memory. Could your payment be held up? Could your account be locked without any notice? Could new identity requirements block you from accessing your own funds? These are the questions every American aged 60 and older needs answered today, not at some point down the road. I'm going to walk you through all of it in clear, straightforward language. No complicated banking terminology, no government speak, just the information you need to safeguard your benefits and your financial well-being. Let's dive right in. How we arrived here, the background you need to understand. For many decades, the American financial system has functioned according to a framework of rules built to shield consumers, including older adults who depend on fixed income sources like Social Security, SSI, and SSDI. These protections were established after painful lessons drawn from economic crises, banking collapses, and situations where ordinary citizens lost access to their money through absolutely no fault of their own. The system was far from flawless, but it had safeguards in place. And for most people receiving government benefits, those safeguards meant their monthly payment would arrive like a clock, settle safely into their account, and be ready to use without any complications. But here's what has shifted. Over roughly the past year, a series of regulatory conversations have been taking place at the federal level within agencies such as the Federal Deposit Insurance Corporation, the FDIC, the Consumer Financial Protection Bureau, the CFPB, and the Office of the Comptroller of the Currency. These are the bodies responsible for overseeing how financial institutions conduct business in this country, and the discussions they have been engaging in are directly tied to how banks process government benefit deposits, how accounts are authenticated, and what occurs when a bank flags an account for closer examination. Most Americans never hear about these conversations because they take place within regulatory filings and policy sessions that the general public rarely encounters. But the consequences filter all the way down to your personal checking account. So, what exactly is this new rule and why should it concern you? In straightforward terms, the regulation involves what is known as account authentication and fraud prevention protocols. Banks have been facing intense pressure from federal authorities to combat fraud within the benefit system. Billions of dollars have been lost to fraudulent Social Security claims, identity theft aimed at elderly recipients, and bogus accounts created to intercept benefit payments. And while that is absolutely a genuine crisis that demands attention, the manner in which certain banks are choosing to respond to that pressure is generating serious complications for real, legitimate seniors who have been collecting their benefits without issue for many years. Here is how this plays out in practice. When a bank receives a deposit into an account that appears unusual, or when an account displays activity patterns that their automated systems flag as irregular, the bank has the right, and under the updated guidance, in certain circumstances, the requirement to hold that deposit, examine the account, and in some cases, restrict access until the review process concludes. Now, for most individuals, this might sound like a minor hassle, but for a senior who is living entirely on Social Security and depending on that payment to cover rent at the beginning of the month, even a hold of 3 to 5 business days can be catastrophic. We are talking about missed rent payments, an inability to buy food, being unable to pick up life-saving medication. This is not a trivial matter, and it becomes even more layered than that. The updated guidance also addresses something called Know Your Customer requirements, which banks are already legally obligated to follow, but which are now being broadened and revised. Under these requirements, financial institutions must confirm the identity of their account holders and ensure that the accounts they manage are being used in legitimate ways. For most younger customers who routinely update their personal information, use mobile banking applications, and respond quickly to digital notifications from their bank. This entire process is virtually unnoticeable. But for seniors, particularly those who do not own smartphones, who may have restricted internet access, or who simply are not reviewing their email on a daily basis, a verification notice from the bank can go completely unseen until it has already become a serious problem. What this actually looks like in everyday life. Allow me to walk you through a real world scenario of what this can look like in practice. Picture a 74-year-old woman named Dorothy. She has lived in the same apartment for 15 years. She has maintained the same checking account at the same bank for more than 2 decades. Every single month, her Social Security payment lands in that account on the second Wednesday. She uses those funds to settle her bills, purchase groceries, and pay for her prescriptions. One month, her bank sends her an email requesting that she verify her identity as part of a standard compliance update. Dorothy does not check her email regularly. She misses the message entirely. 2 weeks later, her account is placed under a temporary review restriction. Her Social Security deposit arrives as scheduled, but she cannot touch the money while the review remains active. She travels to her local branch and is informed that she must present 2 acceptable forms of identification along with documentation confirming her current address to clear the matter up. The situation gets resolved eventually, but not before she's fallen behind on a bill and spent several days unable to access any of her money. That kind of situation is happening to actual people right now in communities throughout this country. What about the federal protections that exist for Social Security payments? Now, you may be asking yourself, isn't there a federal law that shields Social Security deposits from being frozen or withheld? And the honest answer is yes, such protections do exist. Federal law provides meaningful safeguards for Social Security and other federally issued benefit payments that are deposited electronically into a bank account. Specifically, when a bank receives what is called a garnishment order, meaning that a creditor is attempting to legally collect a debt from your account, the bank is required to assess the account and protect a designated amount of funds representing federal benefit payments from being seized. That protection is genuine and it carries real weight. However, and this is an absolutely critical distinction, that protection applies specifically to garnishment situations. It does not prevent a financial institution from placing your account on hold for compliance or identity verification purposes. Those circumstances are treated as entirely separate matters under banking law. This difference is enormously important, and it is one that many seniors and even certain financial professionals are not fully aware of. So let's be crystal clear about it. If a creditor is attempting to collect money from your Social Security benefits to satisfy a debt, in the vast majority of cases, that is illegal, and your bank is obligated to protect those funds. But if the bank itself has flagged your account for a compliance examination, or if there is suspected fraudulent activity associated with the account, the bank carries legal authority to restrict your access while that process is underway. The critical thing is understanding your rights in each specific circumstance and knowing precisely what to say and do if this situation ever arises for you. Particular concerns for SSI and SSDI recipients. Let's spend a moment on SSI, supplemental security income, because the reality for SSI recipients is somewhat different and in certain respects even more precarious. SSI is a needs-based program, meaning it exists specifically to serve individuals who have very minimal income and very minimal financial resources. The monthly payment levels are lower than Social Security retirement or SSDI benefits, and the people receiving them are frequently among the most economically vulnerable Americans. For an SSI recipient, losing access to their benefits even for a handful of days is not simply an inconvenience. It can constitute a genuine emergency. And yet, SSI recipients face many of the same account verification hurdles as everyone else, sometimes even more pronounced ones, because they may be less likely to possess established credit histories, more likely to reside in shared living situations that complicate address verification, and may have more restricted access to the types of documentation that banks request during a compliance review. SSDI, Social Security Disability Insurance, introduces its own distinct set of challenges within this new banking landscape. SSDI recipients are individuals who contributed to the Social Security system through their employment history, but are now unable to work as a result of a qualifying disability. Many people receiving SSDI are managing serious medical conditions that affect their capacity to respond promptly to bank inquiries, travel to a branch location, or navigate involved verification procedures. Some are dealing with cognitive challenges, physical limitations, or mental health conditions that make these kinds of administrative tasks genuinely overwhelming. And the new banking guidelines, because they were developed with fraud prevention as the primary objective, do not always account for the very real barriers that individuals living with disabilities encounter when attempting to satisfy identity verification demands. So, what concrete actions can you take to protect yourself starting right now? That is the portion I truly want to dedicate real time to because understanding that the problem exists is only part of what you need. The other part is taking specific, deliberate steps to ensure you are as protected as possible, and that if something does occur with your account, you are fully prepared to handle it. Let's walk through this carefully because I want you to leave this feeling knowledgeable and empowered, not anxious and overwhelmed. Step 1. Update your contact information immediately. The very first and most essential action you can take is confirming that your bank has your current, accurate contact details on file. This sounds almost too simple, but you might be genuinely surprised at how many people have gone years without updating their phone number or email address with their financial institution. Banks are relying increasingly on automated systems to send compliance and verification notices. And if those notices are being sent to an outdated phone number or an email account you no longer actively monitor, you may not receive them until your account has already been restricted. So this week, not sometime next week, but this week, I want you to either call your bank or visit your nearest branch location and confirm that they have your correct and current phone number, your accurate mailing address, and if you use it, your active email address. This one straightforward action can head off a significant number of problems. Step 2, learn your bank's direct deposit policies. The second thing I encourage you to do is familiarize yourself with what direct deposit protections are already in place for your benefits. Visit your bank and ask a customer service representative to explain their specific policy regarding holds or reviews applied to direct deposits originating from the Social Security Administration. Ask them directly what triggers a review process. How long is a review permitted to last? What steps would you need to complete to resolve a hold if one were placed on your account? Write down everything they share with you. Note the name of the representative you spoke with. Having this information in advance means you will not be scrambling to piece it together in the heat of a crisis. Step 3. Consider building a small emergency reserve. Third, think about whether it would be practical to maintain a modest emergency reserve in a separate account, even if it amounts to only a few $100s that is not connected to your primary benefit deposit account. I fully understand that for many seniors living on a fixed income, this is easier to suggest than to accomplish. And I am absolutely not presenting this as a mandatory requirement, but even a small financial cushion can provide you with critical breathing room if your main account is ever temporarily restricted. This could take the form of a basic savings account at your existing bank, an account at a local credit union, or even a prepaid debit card that you keep loaded for unexpected situations. Step 4, keep critical phone numbers within easy reach. Fourth, and this point genuinely cannot be overstated, make sure you have the direct phone numbers for the Social Security Administration and your bank's customer service department written down and stored somewhere easy to locate. If a problem arises with your deposit, every hour counts. The faster you can connect with the right people, the sooner your situation can be addressed and resolved. The Social Security Administration's primary contact number is 1-800-772-1213. Representatives are available Monday through Friday between 8 in the morning and 7 in the evening. If a problem occurs with your deposit, they can confirm whether your payment was transmitted and when, which is vital information for any discussion you then need to have with your bank. Step 5, designate an authorized contact. Fifth, if you have a family member or a trusted individual who already assists you with managing your financial matters, consider formally designating them as an authorized contact on your bank account. Not necessarily as a joint account holder, but as a person the bank has permission to communicate with on your behalf. This arrangement can make resolving issues far more efficient, particularly if your own ability to engage directly with the bank is affected by health conditions, limited mobility, or other personal circumstances. What about the possibility of changing banks? Now, I want to address something that surfaces frequently in conversations I have had with older adults regarding this topic, And that is the question of whether it makes sense to switch to a different financial institution. Some individuals, after becoming aware of these updated compliance rules, have contemplated transferring their benefit deposit to another bank or credit union where they believe they might receive better treatment. I want to approach this thoughtfully because it is not a decision anyone should make without careful consideration. Changing the account where your Social Security or SSDI is deposited means you will need to update your direct deposit information with the Social Security Administration, a process that typically requires 1 to 2 complete payment cycles before it takes full effect. Throughout that transitional window, it is critically important that your original account remains open so that incoming payments do not get misdirected or lost. If you do determine that switching is the right move for you, contact the Social Security Administration before you close your existing account and make absolutely certain the new account is fully established and confirmed before initiating any modifications. Credit unions deserve a specific mention here because many seniors have discovered that credit unions tend to offer a more personal, community centered banking experience that can be more accommodating during compliance situations. Credit unions operate as member owned financial cooperatives, and they generally have greater flexibility in how they approach individual customer service circumstances. They are also federally insured up to $250,000 through the National Credit Union Administration, just as traditional banks are protected through the FDIC. If there is a credit union in your community that you have been thinking about, it may be well worth stopping in to inquire about how they manage federal benefit deposits. Be alert to scams targeting seniors. I also want to take a moment to address something that is closely connected to this banking rule discussion, and that is the alarming increase in financial scams being directed at older Americans. Unfortunately, whenever there is uncertainty or confusion circulating within the financial system, those who prey on vulnerable people take full advantage of the situation. Right now, there are individuals specifically exploiting news about banking changes and benefit policy updates to target seniors with deceptive phone calls, fraudulent emails, and misleading text messages. The most frequently reported version of this scheme unfolds something like this. You receive a call from a person claiming to represent your bank or the Social Security Administration, informing you that your account has been flagged and that your benefits may be disrupted unless you act immediately. They then request that you confirm your Social Security number, your bank account details, or other sensitive personal information during that phone call. Please take this to heart completely. Neither the Social Security Administration nor any legitimate banking institution will ever contact you without warning and ask you to provide your Social Security number or banking credentials over the phone. If you ever receive a call matching that description, end the call immediately. Then reach out directly to the Social Security Administration or your bank using phone numbers you already have in your possession, not any number provided by the person who called you, and report the incident right away. Final reflections. As we approach the conclusion of this overview, I want to recap the essential points we have covered so that you can carry them forward with you. We examined the new banking compliance regulations and how they connect to fraud prevention efforts that can sometimes result in holds or delays affecting federal benefit deposits. We clarified the distinction between garnishment protections, which are substantial, and compliance hold policies, which are considerably more nuanced. We explored the particular challenges confronting SSI and SSDI recipients. We reviewed practical protective steps you can begin implementing immediately. We addressed scams, deposit insurance coverage, and the various resources available to support you. Most importantly, I want you to leave with this understanding. You are not without power in this situation. Yes, the banking system is complex. Yes, the rules are evolving in ways that are not always communicated effectively to the people most directly affected by them. But you have rights, you have access to resources, and you have people advocating for you. The more thoroughly informed you are, the stronger your position becomes when it comes to protecting your benefits and your long-term financial stability. And that is precisely the purpose behind sharing this kind of information, because you deserve to receive it in a manner that is transparent, grounded in fact, and genuinely actionable. Stay protected, stay informed, and please take good care of yourself. Subscribe to this channel for more important updates.